Well, Wall Street also buckling up for, get this, triple witching. That's happening today. $4 trillion in options set to expire. Let's bring in Yahoo Finance's Jared Blikre for the snapshot here, Jared. And I mean, of course, this makes what we're seeing within the markets even more perhaps volatile on the day, too.
Yeah, well, here's the deal with triple witching. It used to be quadruple witching, no more, and that's because we don't have single stock futures anymore. We used to have options on those which would expire. So we have the futures, which are the E-mini, S&P 500, NASDAQ, and Dow futures, which are also expiring today, in addition to options. And all of this just means a bunch of risk, a bunch of bets that people put on in the market are expiring. So the index options that are bets, those are bets on the S&P 500, where the Dow is going to be, those expire on the open today. And then for individual stocks and the ETFs like SPY, that gets settled at the end of the day. So basically whatever the last tick is. Now, all of this options activity has affected stocks more and more over the last couple of years. We've seen the rise of the retail trader. Most options now are bought within 1 day of expiration, and there's a whole dynamic there that leads to. But the bottom line is option expiration is an important date. You get to certain levels in the S&P 500, those can become more important or less important. So we have a lot of what's called gamma that's rolling off today. But look, the S&P 500 has been in a holding pattern for the last few weeks. Now, the Dow happened to close at a 3-month low yesterday, but the S&P 500 is still in a trading range unless it breaks 3,900 to the downside or 4,200 to the upside. That's the range I'm looking at, still in that neutral pattern here. And despite all the weakness that we saw here from the week, as a result of that Fed announcement and also the rejection of what should have been a good news CPI report, I think all of this is pointing to the fact that traders are waking up to the potential for a nasty recession last year, and Powell has tried at length to convince traders and everybody else that that's going to happen, and I think the market just slowly realizes that on a day-to-day, week-to-week basis.
Jared, do you think volume will be higher than average the last week? Normally, Brian and I were talking about this before we came on. It's the holiday season. Traders are not necessarily at their desk, but if there is recession fears climbing and you have these wild swings in markets, do you think volume will be high and we might see more swings in the markets next couple of days?
Yes, I think volume is going to be very high today, not only because of options expiration. I believe it's S&P 500 rebalance on the close. That just means if you want to take a bunch of big positions ahead of the new year, if you're a portfolio manager, you want to be seen with the right stocks in scare quotes at the end of the year, this is the last day to really get those positions in. So we might see some jostling here, but overall, we actually tend to see a little bit less volatility in the indices, although in individual stocks like Apple or Tesla, you might see a little bit of elevated volatility. It depends on the particular stock that we're talking about.